Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio. Today is April 16th, 2021. What's going on with rates? We got some great news on the housing market, so don't go away. We'll be right back. Okay, so let's get to it. I know it's Friday. You guys want to get out, go out to dinner, go out and drink some beers, to go out and just have some fun. So let's get at it, and we'll go from there. So headline news is great news. Housing starts reach highest level since 2006. Guy, there's a pent-up demand. There's not a lot of people selling their homes. One of the reasons is forbearance. Other reason is people just are uncertain about things. So they're not selling their house because they're like, I don't want to rent. I don't know how my job history is or job status is going. And if you're in a forbearance, and you don't have to make a payment for another 2, 3, 6 months or so, why would you sell your house and then have to go rent or start a new mortgage when you don't have to make mortgage payments right now? So that's my philosophy behind all of this. So the economic calendar we got today, housing starts came in higher than expected. Previous month was 1.4 million. Consensus was supposed to be 1.6, came in at 1.7. Awesome. Building permits. So how are the permits going? Well, we are actually exceeding there too. That's great news. And then the other thing is consumer sentiment, how people feel about the economy or where things are going. Well, it's uptick. Previously, we were in 84, now we're in 88. That is good news. So people are starting to feel a little more comfortable with things, but I think still people are a little bit leery on in a bunch of areas, especially housing. And the housing thing is, the headline numbers and all the clickbait is, housing crash coming. I don't expect a housing crash, and I have several videos on that. The main reason behind it is the forbearance. If you're in forbearance and your mortgage payments are postponed for another 2, 3, 6 months, a year, why would you sell your house? So I'm not going to repeat myself. Right now, MBSs are down 8. That's still not a big enough number to make rates change for today. But let's see where we are on our technicals. We go down through here. Look at this. This is pretty cool, and it's filling in right in the spots that we thought it would fill in. So let's go over. This is what's happening to the MBS market. MBS is basically mortgage-backed securities that trade on Wall Street that determine or are the biggest component of your mortgage rate. Okay, this is what's going on with the price of the bond. Okay, everybody say it with me. What happens when the price goes down? You got it. Rates go up. So when this number is down in red, rates are going up. When the number is green or going up, rates are coming down. There's an inverse relationship there, okay? So but the 8 number isn't enough to make really many changes. But let me show you the technicals behind it. So this is the trajectory that we're taking, okay, right here. So now we can kind of get a line in there and say this was a little bit of an anomaly here, but that's where our line is, okay? So what I try to do is try to help you and help my clients predict where rates are going. Well, the cool thing is, here, we monitor these lines here. These are called Fibonacci levels. These are resistance levels, but we're not monitoring them right now because they're not really helping us. So what we do is we drill down to the macros and look at 25-day, 50-day, and 100-day moving averages. Okay, those are represented in these lines here. Look what's happening right here. Okay, look what's happening. We're squeezing into this range right here. Okay, what did I say? I expected us to be at 103.50. Where are we? 103.4978. Bam, we did it. Okay, so I don't think anything's really going to happen from here. We should basically be stagnant and holding in this pattern. However, the pattern is kind of nice because it's an upward trajectory. So if we break out of this, the next resistance lines is going to be 2 things. One is the resistance line with this Fibonacci level right here. Okay, this red line that puts us at 103 point, probably about 7 or 8. And then we could potentially have room all the way up to here, which is about 104.25. Okay, so it's nothing but it looks like good news right now. And again, guys, when this is going up, rates are coming down. So what happened intraday? Let's look at it. It's a yo-yo. And I don't know if the stock market today or the bond market is doing the same as work here, but I still have a bunch of people on vacation, spring break and such. So I don't know if there's limited capacity that's trading, but these numbers are kind of, it's not big moves, but there's a lot of red. So when people start selling, they start selling. We haven't closed yet, so I'm hoping this stagnates and we basically stay steady. And that's what I'm assuming is going to happen right there and then. So let's go back to this. And guys, I'm going to show you something here at the end, because everybody's like, Dan, you should keep showing these averages, but what are rates? Guys, it's hard to say. But let me go over where the 30-year rates are right now for conforming, jumbo, FHA, and VA. Okay, my FHA and VA are one and the same. There are some lenders out there that have lower VA costs or lower VA rates. But let's just go over this just generically. Again, these are not my rates. To get my rate, I really need you to call us or apply, because there's a ton of components that are involved in the rate, and I'm going to show you that in a second. So let's fly through these basically. 30-year conforming is at 316, 30-year jumbo 317, FHA 318, and VA 2.79. Guys, this is a blend. Okay, rates technically or truly trade in eighths. So this would be, and they round up. So this would be 3.25. This would be probably 25. This would be 3.25. This would be 2.75 or 2.875. They go in eighths. 1 day delta, 7 day delta, 4 week delta. Delta means change. So since yesterday, we had a 4 basis point reduction in the rate. 4 basis points equals, if you want to see it in numbers, 0.04. That's how you break down basis points. That would be 0.04, 0.03, 0.01. You get it. Okay, so this is the change, what has changed in the last day, the last week, and the last 4 weeks. And the quotations here mean reduction. So they are down 4 basis points in the last day, 10 basis points in the last week, 14 basis points in the last 4 weeks, so last month. Okay, and let me teach you something here. Here's what we call the LLPAs. So basically, let's start, we start at a rate and we'll have a floor rate or the base rate. Let's say that rate, and I'm just making this up for right now, just for simplistic purposes, is 2%, okay, 2%. So I always say here, how do you determine a rate? The rate is the MBS markets and the yields, plus LLPAs, plus profit margins, okay? And I got you completely confused, but let me show you where all this correlates into. So I always say, your credit score affects your rate. It does. Let me show you right here. So you can see it at a 620 credit score right down in here. I'll try to zoom this, but I'm not going to zoom it too much because it'll get distorted. There, you get hit on your rate depending on what your loan to value is, okay? And your loan to value is right up in this area. So loan to value is your loan amount divided by the value of the property, okay? So let's just go through, for example, let's say we're at 60% loan to, now let's make it a little bit simpler. Let's say we're at 75% loan to value. We're in this category right here. You can see that if you're at a 620 credit score, you're going to have 3 basis points added to that rate. Okay, this isn't exactly how it works because this goes to the pricing, but let me just make it make sense. So 620 credit score, you're going to get hit 3 points for that. Okay, 640, you're going to get hit 275 points for that. If you go all the way up to a 740, you can see that you're at a quarter. So the differential between 620 and 740 is 2.5 points. See it? Okay, see it? So that's one piece of the puzzle. So I always ask you when you email me, what's your score? What's your house value? What's the loan amount you need? That fills in this section right here. Now this section here is for rate and term, or if you're purchasing a house. Look at the differentials here if you're looking to cash out. Okay, they change. So so that's that. Okay, so now we go down here, standard adjustments. If you don't want an escrow, it's going to cost you 0.125 in points. Okay, escrow holdback, home save, 2-unit building, 2 to 4 unit building, 1 point. High balance, 1 point. Non-owner occupied, meaning rental properties, up to 4.375 points. Okay, so get it, guys. I hope you get it. These are just a fraction of the adjustments that come on to rates. So if you ask me, Dan, what's today's 30-year fixed rate? My question going to be back to you is, what's your credit score? What's your loan to value? Are you looking to cash out? What kind of property do you have? Do you want to escrow? And that's why I ask those questions. So now do you see why I can't post a rate? The 30-year fixed rate is X. It's not accurate for you, because I can almost guarantee you one of those adjustments is going to apply to your loan. So if I go back and say, Mr. Homebuyer, your rate's going to be 2.5%, and then I find out you have a 640 credit score, you're only putting down 3%, 5%, and it's a 2-unit building that's a rental property, ooh, now your rate's 5.75. You'd probably be pretty ticked off at me. So that's what I'm avoiding by asking you a bunch of questions when you go and ask me what the 30-year fixed rate is. So I'm not avoiding your answering your question. I'm avoiding giving you false information. So that's it for today, guys. If I can be of any help, please, first thing is give me a thumbs up, subscribe down below, and hit the bell so every time I post a video, you get an alert. But if you're looking to build, buy, refinance, or you're in a forbearance, please reach out to us. I would love to be your first choice and your only choice, because you can see that the transparency we have here, the knowledge we have behind my staff and everything. And if you want to get involved with us in regards to a mortgage, or you're a realtor out there and you're like, Dan, I like the content you have. How can I partner with you to send my clients to you? Or you're a loan officer out there and you're like, Dan, I like what you're doing here. You sound like you know what you're doing, and I bet you have a good training program, which we do. I'd love to talk to you. So that being said, here's the best way to reach out to us or to find out more. Check me out on YouTube, The Rate Update with Dan Frio, and you're going to find over 800 videos there. We should hit 13,000 subscribers today, hopefully. And the next thing is, if you really want to get started on a mortgage, go to therateupdate.com. I ask you to click this button right here and apply. This will take you to our mobile app. It is awesome. That's one word, the one word I can say for it. It is awesome. You can basically start your loan here and follow your loan all the way through closing through this application, okay? The desktop version doesn't have all those features, but it's still fantastic. You can click here if you're desktop savvy, not mobile savvy. And if you want to call us, that's probably the easiest way to get us. Give us a call at 844-775-LOAN. That's 844-775-5626. Or another way is just scroll a little bit above the bottom. You're going to find our calendar right here. Pick a time that suits your needs, 15-minute, 30-minute, or 60-minute consultation. Let's say I want 30 minutes. I got a ton of questions. Click here. It'll open the calendar and find you a day and time that fits your fancy. Click that. I'll get an alert. You'll get an alert. You'll get a text. I'll get a text. You'll get an email. I'll get an email, and we'll do that consultation either by phone or Zoom. Other than that, there's a bunch of tools up here that you could use to help you through this process. And if you need to find out what the value of your home is, I have a system right here that I pay for. It's a paid subscription, but I pick up that cost. I think we have about 10 or 15 additional openings in here. So jump in there while it still lasts, because when they're all gone, they're all gone. So that is it for today, guys. Thank you so much for watching. Have a great weekend, and I'll see you Monday.